Talk about trigger happy. One of the big stories of the past few weeks, of course, has been Blue Sky Alternative Investments. Ever since Glaucus Research came out with, what do they even call it, an opinion piece almost in terms of what their views as to some of the issues, largely around a couple of aspects, in particular the valuations of the assets within their funds and then these fee structures around it. We're going to talk in a little bit more detail about that, but in particular, interestingly, to get the view of those people who are activists within markets. And for that, James Tayler from Morphic Asset Management joins us. Of course, Jeremy Hook from TMS Capital is still with us. James, appreciate coming on board. This has been quite a fascinating story to certainly watch from the outside, and made a little bit more, I suppose, interesting because of Glaucus's track record, at least in Australia. They've had a couple of blow-ups around the region, but of course many will remember Quintus became formerly TFS. Look, from somebody, and we'll talk about your background shortly, but from someone who has been on the side of the activist hedge funds approach, what have you made of what's happening between Glaucus and Blue Sky, and more broadly the rise that we're seeing in this sort of investment case and this sort of activist movements?
Just to make it clear, neither myself or Morphic has a position in Blue Sky, so my comments are hopefully completely objective. I think we see likely more of this kind of action. I think, let's take both perspectives. The activist perspective, many activists have long-term committed capital. They have an advantage of a lot of resource, both money and time. So they can undertake a huge amount of, quite often, forensic research, accounting. They have access to legal opinion and so on and so forth. The analytical game is like a bit of a detective game. Companies are committed to a certain level of disclosure, subject to their listing jurisdiction and accounting rules. They often give the bare minimum. If they give additional data, it's usually to cast the company in a good light and to be able to generate a great narrative. So the activist is looking for little clues, little bits of information, and of course it's putting these together, these publicly available bits of information, and drawing conclusions, extrapolating, interpolating, drawing conclusions, inferring conclusions. The biggest thing an activist has is its reputation. You only make, bearing in mind the public nature often of these campaigns, you only make a glaring analytical mistake once. Otherwise, your reputation's toast. So
when they come to markets in terms of voicing, making public their position and their view on a company, they generally are there with a rock-solid belief in terms of the position they're taking because of that concern around, as well as financial, reputational damage.
Absolutely. They've given it a lot of thought. They've weighed up the pros and the cons and the probabilities connected to their basic information. And they've certainly taken legal advice. And in this case, they're certainly very well aware of their obligations as a market participant. So I think in this case, the Blue Sky might have made a mistake in calling for a trading halt, because I think that underestimates the likely work that has been done by the activist.
One of the other aspects that has been brought about in conversations with what we've seen as a result of the Glaucus versus Blue Sky is the idea of whether or not what they're doing, what others do when they sort of take these and publicise these positions, the difference between, on the one hand, what could be described as market manipulation versus price discovery. I mean, it seems to be quite a thin line between the two sometimes.
Yes, however, in this case, given the nature of the company and the nature of the assets that it's investing in, which are illiquid, where there isn't an observable market price, then I would argue this could be demonstrating activism, helping market participants by doing, having done a lot of work on their behalf.
Is going public always the first step for these activist investors? I mean, have they any backdoor channel to these companies, or that's not their modus operandi, just from a starting point?
Typically, if you're engaging on the long side, then most successful activism takes place in private. In fact, a lot of corporate actions take place because of active, engaging shareholders. However, on the short side, the strategy is relying upon the signalling impact of you putting out there that idea. So to the point that there's obviously some legal liabilities attached to being that vocal, you've probably done your homework. And I think in this instance, you've only got to look at the track record of Glaucus. A colleague of mine did that on my behalf, and it's pretty outstanding.
Is that right?
So, my experience quite often, where there's smoke, there's a fire ultimately.
Looking at it as well, your thoughts around making, if you're on the short side, how often, and sort of taking up from Nadine's point, how well-worn a path is it going public with your views and your position? Because from speaking to other people who do long-short as well, they quite often short a stock sometimes for 2-3 years, waiting for the catalyst, waiting essentially for the market to see what they've seen. If they see the earnings picture as being nowhere near actually the reality, certainly into the future, but they sit and wait for the market to catch up with their view as opposed to manufacturing that catalyst, such as going public with your research.
Absolutely. I mean, traditional long-short managers will do that, but have a broader portfolio.
Yes,
my suspicion is this activist plus others that I'm fully aware of have much more concentrated portfolios. If you think of their typical clients are the very large institutions that they hold the market, so they don't need the fund to provide diversification. They want alpha opportunities. And of course, the way you would typically go about this was you'd have your idea, you do your work, you put your own capital at risk, and then you go around your client base and say, anybody interested in this idea, you get an additional level of due diligence done by them, and you get a bigger book. So it may well have been the case that that they had this position for a long time. They chose, I think, quite a clever day to make their announcement, given the prior placing.
That's right.
Again, I think it alludes to the fact that these guys should be taken seriously.
Jeremy, could you take a view as well that the company like Blue Sky, with the type of investments they make, which are opaque in their very nature, could you make an argument about whether or not that is the type of vehicle that should be a listed entity, considering the opaqueness of the underlying assets and value with which they're investing people's money in?
There is a good question to be asked there. I mean, we've never lived in an era where it's so easy for a small investor to go and buy a stock, and why not buy one that's moving up a lot? And how much effort and research can they put to investigating inside any company, let alone one as opaque, using your word, James, which is an accurate one. So it doesn't suit it, but, we'd also talk about free markets and the right to choose your own path there. So Blue Sky, I just think the lesson to investors is, stock prices going up doesn't justify buying it or being in. There was no, I think you have to realise how skilled it is to be a successful investor over a long period of time, and how many tricks there are. And, to buy it, people like James or myself would spend long, not days or weeks, to buy something like that. Now, to me, I reached a point with that stock where it just got too hard to put the maths together 2 years ago, 3 years ago, to make sense. So I just leave it. And I can find very transparent stocks to invest in, so I go to those easier areas. Transparency,
the key. When it comes to Blue Sky, is this sort of a red flag that there are other sort of, perhaps not similar companies in their investments, in their assets, but other sort of examples in the Australian marketplace that are probably ripe for this type of revelation?
Oh, for sure.
Perhaps without naming names.
Absolutely.
Unless you want to.
Yeah, of course. We'd love that. I was trying to make it easy.
I'm fully aware that I live and work in a glass house, so I'll be throwing soft stones. Clearly, and the amount of disclosure that a typical fund manager has to give on a regular basis is quite small. And there are umpteen examples whereby, if you look at the top 10 holdings of a fund, if you look at the asset allocation of the fund, and then you look at the return that they generate, it doesn't make sense. The issue I have with that is that there might be a good explanation, but the real issue is it gives the manager latitude to perhaps do something other than what he's sold the client. So he sells the client on his ability to pick stocks, his or her ability to pick stocks, but then has the latitude to trade FX or futures markets. And that's fine, because the average investor, as long as he's making money, he's not going to question it. So the blow-up, when it inevitably occurs after a whole load of fees have been earned, the destruction of retail investors' capital, and really, you know, the only solution here is either the industry en masse decides to be more transparent, don't see that happening, or the regulator steps in. I'd also say that this is one of the main pillars of the ethical or responsible investing movement that is gathering momentum at the moment, and it's transparency, and it's full transparency, because of course then our retail clients or any clients can really hold us accountable to our actions.
Are we moving more towards what you see in the US, where you have these very high-profile, very aggressive activists? Investors, Pershing's being one of them. It's a great documentary on Netflix about, the name escapes me in terms of who they were shorting for many, many years. But doing the rounds of television, talking about the case, why they described it as a Ponzi scheme.
Herbalife, yeah.
Herbalife, that's what, lost an awful lot of money on it. But are we heading that way? Is there going to be more of that sort of stuff here, do you think, in the Australian market?
I draw a distinction between US activism and the activism I've been a part of and observed in Europe and the rest of the world. The US is typically about the proxy battle. It's about getting votes, and it's about getting your people on the board. And then it appears, once you've done that, even with a small number of votes, you get ultimate power. That says something maybe about corporate governance in the US. But in the rest of the world, the most successful activism is that's done quietly behind closed doors. It's responsible shareholders, knowing companies, engaging, adding input, management listening or sometimes not. And that goes beyond engagement with just the company, it's engagement with all stakeholders. That often includes the politicians, the regulators, every stakeholder.
How about the auditors? How did the auditors come out looking in the wake of this whole Blue Sky revelation?
Look, my suspicion is that the issue lies with just the lack of transparency on the valuation of those assets. And at the end of the day, as the company points out, and let's give the company a chance here, they're listed, so they're highly regulated, and they're very significant legal consequences of wrongdoing. They've got a Big Four auditor, and they point out the very professional advisors they have on the valuation front. They also point out the very blue chip clients they seem to have attracted.
Yeah.
But when it comes down to it, private equity, how do you value that until the point of exit?
Sale. And is that one of the other, could you argue, canny points of Glaucus targeting Blue Sky? Is in essence for Blue Sky to essentially quash the arguments, or some of the arguments by Glaucus, they need to actually provide their valuations and how they've done it, but they're reticent to do that. As they say, that would be like someone who owns a house going to market saying, here's what I think it's worth, and suddenly limiting potential upside from that, or limiting the amount you're likely to get from a buyer, sorry.
I mean, let's be clear. The solution from the company's perspective is full transparency. Show people the numbers, then the following day buy back a whole load of your stock, and then maybe sell some assets to crystallise some value. Then they've got nothing to hide. I think their defence to date is weak in that context. And let's go back to the point Jeremy made about the private investors here. Now, I had a cursory glance at this and saw a couple of red flags. One is obviously the asset type. The second is their performance numbers. They look great, but they don't describe whether these are unlevered or levered returns. And I think the bigger red flag is the fact that in calculating that performance number, they omit almost 50% of their fee-generating assets, because they say that these are assets that are these were raised less than 24 months ago, and to date, their market value has not changed. So that's half of their. So by definition, we can interpret those as cash. So if we put them into the performance calculation as cash, obviously their performance is going to be lower. But as to the subjectivity of have the value of those assets changed? Well, they're private equity. They invested in them, so they're probably pretty optimistic. They're probably going to wait a long time until they write them down if indeed they have to. So that's the kind of detail that private investors, really, you can't expect them to pick up on that.
Yeah, Jeremy, you were sort of insinuating earlier in a conversation that perhaps, there's a price for everything. So we've seen this decimation really take place when it comes to Blue Sky's share price, down again, as I mentioned, I don't have it in front of me right now.
5.30 or something like that.
Yeah. So when
I mean, like when we looked at it, it looked like it was a $3 to $4 sort of valuation. But again, with a low level of confidence about that and greater confidence about other things, but it looked excessively priced and then doubtfully priced. And so, but within there are some assets of value. There's no doubt about that. It's just you have to have a degree of certainty when you invest, and that's the way we play it, why we avoid this sort of stock.
So, from your experience, how is this likely to play out? You've got Glaucus short, you've got John Hempton from Bronte Capital, extraordinarily successful and well-known money manager, announcing he's now short Blue Sky as well. I mean, just somebody you wouldn't want to be in the case. No doubt there are others as well. How does this play out, do you think, and from the Blue Sky side, what do they, well, you sort of touched on it before, but in terms of what they need to be doing to try and stave this off, because the momentum seems to be building, as Jeremy mentioned, down another over 5% today.
Aside from their phone is ringing off the hook from shareholders, those recently new ones and the existing ones. And if I was in their shoes, I would be demanding transparency. And if I didn't get it, then I'd be voting with my feet. So they have to have a good, long, hard look at themselves. And I recognise they all appear to have skin in the game here.
Yeah.
So I think they would be advised to be transparent. If they've got nothing to hide, then disclose. But given this public campaign, as you say, other people will be doing it, and I'm sure other people now, not having had the head start of Glaucus, will be doing that hard work. One thing I've learned about this part of the world is the journalists are sharp and they're tenacious, and there'll be some people doing some real digging on this. So I'm sure this will unfold further over time.
James Tayler, Morphic Asset Management, pleasure to have you in today. Really appreciate you joining us.
Enjoyed that. That was great. Thanks, James. We're going to take a break. When we come back, we'll get you across the top and bottom movers of the session today. So stay with us.